Okay, so it looks like Bitcoin seen a nice push towards the downside yesterday. Now, it seemed to coincide with just after the market close, which kind of surmises, at least to my understanding, that there was some reaction to Microsoft's falling short on the earnings. So what we're going to show you is right now why I believe Bitcoin is looking to head further down and why we can make a case for that. I always like to kind of start with a vanilla chart and then we build on this so that you guys can follow along and get the sense of why we're doing this. So we're going to start with a parallel channel that is being respected. So we can bring that in here and you can see we've pretty much touched the top, came down, come back up to the top, and now we're kind of coming down again. Now, if I zoom into the smaller time frame here in the 15-minute, let's just say, you can see what looks to be a new Elliott wave starting to form. Let's actually go into the 5-minute. I think it's easier to see on the 5-minute. Let's bring this in here. You can see, maybe you can agree that if we take, let's see how we will do this. Let's get rid of the magnet tool. We can say maybe like this is the first wave, and then we come back up here for wave 2. We come back down for wave 3, more impulsive, come back up for wave 4, and then we finish on wave 5. And then what you can suggest is for our second wave, we want to see an ABC structure. Now, this would look like, for me, wave 1, or wave A rather, come down, correction for wave 2, or B, and then finishing off, obviously, with our wave 3, which would be here. Now, next step onto this really would be another 5 waves down to the downside. So that looks structurally, as I'm looking at things, like it could very well play out. Now, one of the things I always like to do, and we've not done it in a while, is to take a look at our stickiness factor, all right, which is to say, where does price like to stick? So if we can make a case, let's just say that we do think we're going to head down. The reasons why I think we're going to head down is quite simple, and we can start with liquidity and our high term time frame. You can see huge insane respected level for the monthly. It gave it a little bit of a chance up here, hit it once, came back, hit it again, hit it a third time, and hasn't been able to break through. So we've seen some downward momentum. Now obviously if you take this to like a 12-hour and you look on a much longer time frame, still very much bullish structure. However, I think we'd all agree we're at a point where we need to come down, realize some of maybe it's, even if you take an Elliott, a Fibonacci retracement and you go from your low here to the high, we've nowhere near even came down enough to suggest that this would be, if this was the fifth wave 5. And let me just show you how I interpret that. If we go from, let's do proper Elliott wave. If we go from here, 1, 2, 3, 4, 5. Now we would potentially be into some sort of an ABC correction. Now, usually, as I say, ABC corrections come in 2 formats. They can either be A, B, C, in which they are, let's just say, flat corrections, or they can be, let's just take this one off for a second, they can be zigzag, which would be counter to the trend. So you'd say A, B, C, and that would be, a pattern that would start to then look at whether you want to move to the upside or whether you kind of want to move to the downside. So what we don't know at this stage is what kind of pattern will play out. If we are in the agreement that that 5-wave structure looks sound, we need to just see. So as I say, taking that data that I showed before and on the ABC correction, or the smaller, let's say it's a micro version of an ABC, that would be your 5-wave here, because we're on a much wider time frame, and a little small ABC correction. So let's just go back to the what do I want to do, 15-minute, right? So we've got this really high level, really significant resistance level here, which we've just not been able to break through. And we believe, again, 5-wave structure to the downside, ABC correction further down 5, and then this could be wave 1. So let's just show you what I mean here. We could start to see something like, where are we? Wave 1, 2, impulsive wave 3, 4, finish off a corrective wave 5. Now that might be too deep of a move, and I will grant you that for sure. But you know, you usually want to have your 5 wave and your 1 wave roughly about the same size in terms of the distance, with your 3 wave, technically speaking, not being the shortest wave, but usually we find that they are the longer wave. And you know, if this is a primary, well then this would be, you know, more of a kind of a smaller version of the 5 waves. You've got your 5 waves within here, we've got 3 waves at ABC. I'm anticipating another 3 waves down here, and sorry, another 5 waves from 2 to 3, another 3 waves from 3 to 4, and then final 5 waves from 4 to 5. Now this is just structure, nothing about this can guarantee that it can play out. However, they are, you know, as we covered in yesterday's session, there are signs that we are starting to see a breakdown in this, so we shall see. And again, just taking an idea on where we are from a wave perspective. Let me just tidy this up a little bit. Go to the peak. You know, that would put us somewhere around this. You know, if I just use that alone, maybe you could say, well, your 5th wave comes to your 0.5, but actually we go to the golden pocket area. Now, yesterday we ran some sound analysis on the reason why this specific area is a fundamental zone for where we could head back to. Now, again, we've got, you know, this. Let me just put that square back on. We've also got this zone here as an interesting zone, simply because we can see how much and well respected this zone is here. So, number of key things why I think this could potentially play out. So we'll just remove them for now. Maybe we should have just hidden them rather than delete them. Actually, it's not a bad idea. Let me just leave them on there. And then do we have? Yeah, let's just, rather than delete them, because I want to use a bit of confluence in a short while. So again, we've got liquidity up at that high zone. So we've still got a plan on DCA in that we can essentially go high. Now that for me would be invalidated if we start to drop down further and we look for potential ideas on maybe longing, or whether we want to look at day trading. And again, hop into the server. Maybe I'll put in a quick review of what the server is here at this point. And then when you come back, which probably is now, we can continue. So I think, you know, based on where we are heading down a little bit. We'll just take these off for a second. And what I want to do, interesting kind of thing that I always like to do, and anyone in the server will know this is something that gives a good, let's go to the 4 hour, gives a good idea on where things are. Now, this is that local high, or the top of where Bitcoin went. So I want to go all the way back here. So if you can see on this angle here, and there's an interesting reason why I'm doing this. If I just go to the corner, so you're just basically seeing where the high of Bitcoin was, and its almighty high, and this move to the downside is essentially where we are now to this point. And then we put on our visible range volume. Okay, team, if you are looking for a central exchange to use, maybe you've getting a bit fed up with your own, or you want to find a new one, maybe consider using ByBit. It's the platform that I use myself, also many of the participants in our server in Apex Trades, and it's one that I'm pretty much familiar with. If you sign up with me, link is in the description, you will receive $50 as a welcome bonus, which is always nice. Why would you use ByBit? Well, number one, obviously in a world where exchanges seem to be falling down by the bit, one of the things I liked is they quite quickly jumped on the ability to prove their reserves, which is essentially a way in which they look at what's backing everything within their portfolio. So if you look at their portfolio, this is the Nansen dashboard. You can see majority of their tokens. So essentially you've got like 50% in USDT, we've got just over 20% in BTC, we've got a small percentage of 10% of their own native token, which is BIT, which is a utility token, and then we have around 10% in ETH. So actually, if you think about it, you've got 50, 60, 70, nearly 80% backed by really solid tokens and an additional 4% in USDT. So I think if you're looking for a platform that's well backed, isn't just gonna buckle under the pressure of what something like FTX did as an example, then you should consider ByBit as a way to kind of get that through. Now the other thing I mean, in terms of platform functionality, it links nicely to TradingView, so it has all of the ability to map out, use the same kinds of indicators that you see on TradingView. You can set alerts, which allow, if an alert comes through, to be registered on ByBit if you have certain levels or things like that you want to be able to put forward. It also allows hedge mode, so it means you can do a short and a long position at the same time. Why would you want to do that? Well, maybe if you're at a position where you want to lock in a specific value, maybe it's in a loss position and you want to be able to work that off. Hedge mode allows you to kind of counteract that by locking in that loss for a temporary amount of time until you find a new level that you want to reverse and turn. Of course, none of this is financial advice, but we do talk a little bit about how to manage trades in the server. So I would recommend ByBit. Again, it's one that majority of us use, and I like to see the confidence in a platform that comes out and explains exactly what they're going to do and demonstrates that transparency on their native token. So as I say, if you want to use my link, it's in the description. Helps you out, helps the channel out, and helps me out too, so really appreciate it. So you can see for the entire move, Bitcoin's value area high is at 28,864. The low is 15,440, and we have that point of control for the entire high to low at 19,145. So let me just go ahead and overlay my my volume profile. So what I've done here, and what I always tend to do, is pick the points that stick out the most. You can see value area low, we can see value area high. And then on a daily time frame now, so covering the total Bitcoin, essentially the whole price action from its high to its low, covering the areas on the chart. So I again, looking at the points where the points peak out, just putting a high term time frame line. So getting rid of my visible range here, you can see quite clearly where we have a lot of interest. So we have the daily time frame point of control again at this 19,173. We have the 4-hour point of control down here because it's gonna look slightly different on different time frames, but I like to map these key points out because the reason being is sometimes depending on whether you're swing trading or whether you're looking for day trades, well, they present really interesting points on the chart, and again, you can see we've got a daily VRVP here. This is again taking the whole length of the volume from its high down to where we are now, and looking at where most volume is being traded. I'm missing out the areas where little to no volume is traded, and the telltale signs are always where you see these big moves to the upside where there's no real resistance, and the reason there's no real resistance is because not a lot of volume is being traded. Yet when you come across an area on the chart where volume has been traded, you can see how sticky we get. We get really, really sticky in between them lines. You're kind of on the lines, but we move a lot, between them. You can see, we had a little bit of a kind of resting period here, and again we can look at why that's the case in a second. I've got some interesting ideas on that. Actually, if we go, let me see if we can do this now, because I think it's a good point to see why these specific areas were. Let's see. Not that one. No. So if we go, let me go to let's go to the 2-hour, right? If we take, I'm going to just take off my volume profiles in a second. Remember, a lot of this is around confluence, trying to find areas on the chart that present themselves as a number of ideas at a specific price point to be as accurate as you can. You're never always going to be perfect, but the plan isn't to be perfect. It's just that you've got a plan. So let's take our fib extension right now. If we go low point here to the high point, actually let me start that again, because I like to be accurate with these. Where are we? Fib extension from the low to the high and then back to the low. Now what you can see is at these areas as well. So each one of these, the way the fib extensions work, so your key fib areas are realistically your 236, your 382, your 618, 65. So these are all percentages, 65%, 786, and then orders of magnitude each time above that. So you can say like your 1.236, your 1.382, your 1.618, your 1.65, and the areas between 618 and 65, or 61.8% and 65%, is essentially a golden pocket. So I like to map the golden pocket at each iteration, so you can see, from this swing low to the swing high and then back down to the low, you can see areas on the chart where this was the golden pocket of its extension. So 0 to 1 would be this area here, but we don't map that out because we're not on a retracement. This is where you would map the retracement. This is the area where you would map the extension. So when we were mapping this full big huge run, it's trying to figure out where on the chart are we gonna look to take a rest. And it's interesting that you can see on the chart here, you take a rest around the golden pocket on the one on the one extension. And then when we push onto the 2 extension, we sit around a 236 to 382. So again, I always think having these tools, let's just say, available to you to be able to pull and see where key areas get sticky. I mean, then we can start to look at adding on top of these, like, do we get any confluence? Well, we do. Right now the monthly is right at that 2382. And the weekly, which is further up again, which we've not yet touched, is right by the 786. Don't have anything by the liquidity, but what you could say, and oftentimes, is these are interesting areas nonetheless, in terms of, let's just say, if we pinch past the liquidity and it is a liquidity grab, a real forceful move to the upside, you're looking at areas where you could potentially get a move back down, and usually an aggressive move back down. I spoke about the ABC correction in the last video, so you'll understand what I mean by that. That if we do move to the upside, for me personally, it'll be a short-lived move. And then obviously on top of that, we can also add on our pivot points. Now the pivot points are areas where, I mean, again, I've covered this a lot on different videos, but it's a calculation way back in the day when, before fancy indicators and stuff like that, where you can create a range based on your previous candle. So if it's a daily candle, working out what your top, your open, your close, your high, your low, and your close, and then using a calculation to figure out what the range would be for the next day. And it would also give you can look at the calculation, but it would also give you a resistance lines, and it would give you support lines. So that's effectively what you're looking at with these areas. So if I just take off the fib extension tool, what you can see right now is, from a confluence perspective, this is the pivot for the 2 hour. But I think, let me just double check, it's on auto, so let me just see, that's currently there on Monday the 23rd to Sunday the 29th. This is a weekly pivot. This is showing the week pivot, and what you can see is the pivot for the week, which is obviously, is that quite right? Let me just double check. In fact, let me just do 4 hours. Does that change? Let me just do 2 hours, and let me just change. Yeah, it's changing to the time frame, so it's going to be the daily. No, it's not. It's going to be the weekly. Yeah, which was right. So you can see the pivot for the week. Let's just say we haven't yet came back and tested. The pivot is the range, so the point at which the calculation was derived from the previous day, or the previous week rather. So the activity between this high, low, and close for the weekly candle of this one to determine the next week's data point. So we should find some level of support around R1. If it does break R1, it will then find another level of support around R2. Now, from a confluence perspective, you can say liquidity and R2 are right in that same wheelhouse. But from a move to the downside, again, looking at where we were looking for, not the visible range volume, We want the parallel channel, just so we've got that on there. We want the rectangle, again, that's down there. And we want the, let's see, the volume profile. So there isn't any, it's an interesting thing to note, because right now we may take a small pause around here, but there's no, for me, between the two areas, at least on a longer time frame, there's no significance around this area and this area. So it's like, if we do break in terms of this parallel channel, the next area for me is around this kind of 21,500, 21,400, that kind of area. But it's interesting that the pivot is around 22,156. You know, that's potentially an area where you want to maybe long from as an idea with a tight stop loss. Maybe it's an area where you just want to, you know, don't bother at all. But you'll see, we'll get some sort of a reaction around there, maybe, as an example. So let me just tidy these up a little bit. But yeah, as an idea, just in terms of, I mean, let's just test this out for a second. So that's the weekly pivot. What about the monthly pivot for the entire range? You can see right here, we are so overexposed for the month. This is where we, you know, again, this pivot has taken a month worth of data from the previous month to figure out where the zones are. And you can see clearly, you know, we kind of spent a small amount of time, we rocketed through, and we've hit pretty much, well, we can't go any higher than R5. So right now we're so overextended, you know, it's not difficult to see why we couldn't start to see some movement. Now, what would be really interesting actually is if we do break down, you know, you've got this here. If we have a big move to the downside, well, then you may start to see some sort of head and shoulders pattern. So just to be mindful for all the people who like patterns. What else do we see? Let me just get rid of the pivots for a second. Actually, I don't want to drop them off. I just want to make them minimized. And that's pretty much it. So as I say, right now I'm just structurally, I'm anticipating a move down. Again, just going back to the 15 minutes, we can see, I think I still have the Elliott wave on. Yeah, we you know, we have an ABC correction playing out here. We have 5 waves down here, ABC somewhere here, and then again I'm expecting an impulsive move for a third move. Now that can be invalidated, we don't know yet, but let's just see how this trades for the day. You know, if this was the peak of 2, well, what you want to see is the start of 5 waves, something like. Sorry guys, just a quick pause. If you were enjoying the video, I just want to talk a little bit about the Apex Trades server. So the purpose, so this was built specifically for education and development. However, I do put myself out there by showing and demonstrating my own trades, how I trade, the levels that I like to get in and get out, and this is kind of backed up by the videos that I tend to put out there. By subscribing, what would you get? Well, obviously you'll be able to follow along with me if that's so what you wish to do. If you want to understand how to trade better, if you want to learn how to trade, a shed load of, nearly said something different, but a shed loads of educational content. I do one-on-one sessions with individuals for Patreon traders. These are people who want to find out where they're kind of maybe going wrong, or maybe get some deeper level of understanding as a one-to-one basis rather than in a crowd. Oftentimes I found these very, very useful. We do some daily and weekly technical analysis, specifically on BTC. We have lots of different platforms throughout the team. So we've got HighBlock and Bookmap. Bookmap is a tool you'll have seen often, which shows where the live orders flow and are demonstrated within server. You can see these actually in these channels here. So we'll have, let's see, we have like Bookmap. So we'll be showing on a regular basis where the key levels are residing and where we're kind of looking at. And then we have HighBlock, which is a fantastic tool. HighBlock actually shows you where big liquidation events are going to occur. And good friend of mine, Moonrise, who is one of our moderators, kind of shows and implements that on the daily. So again, if it's something you want to just fantastic community, get involved with, speak to people all in a similar kind of framework and mentality of yourself, all trying to get better at trading, then I suggest you consider maybe coming over and joining our server. Link is in the description, and I will hopefully see you guys there. Something like that, playing out. And then you want an ABC here, and the 5 waves down there. What we don't know is how the ABC will correct. Sometimes you can have WXY corrections, which can be double ABCs and stuff like that. So it gets a little bit complex, to be completely honest, and probably beyond the scope of this session. But yeah, nothing's really changed. As I say, this parallel channel has held up quite well. I think the important thing to note from a volume perspective is we haven't really seen volume dropping. Now, if anyone knows too much about bull flags, bear flags, symmetrical triangles, whatever, when you see a breakout, it's normally from low volume. But I don't think we can say with matter of fact that volume here is dropping. If anything, it's moving up. And if we go back to our parallel channel, it just doesn't seem to be dropping. We're still seeing spikes, peaks here and there, and if anything, these, this volume here is higher than that. So what does that tell you? Really, bulls and bears are still kind of duking it out. We're up here, we're down here. Ultimately, we seem to be heading down. But what you want to see is, if you are starting to see, let's say, if you can do a more of a let me just take off the magnet tool real quick. But if you want to do, like, as you're starting to ascend or descend rather, and you're seeing this kind of, let's say, this activity, to spot a breakout, and I'm talking not just a breakout or a fake out, a proper breakout. What you need confirmation of is volume starting to drip to move away. So as you kind of starting to squeeze and tighten on here, you need to see a negative volume. Let me just bring this up a little minute. Kind of volume starting to decrease. Now, not do this and then back up again, because that for me is all the hallmarks of a fake out, and you see it all the time. I mean, again, if we just take this as an example, to spot a good breakout, you say, you want to see volume increase and then start to go down, and as this move is waving out, volume's really getting low to the point where you just see a huge break to the upside, doesn't come back, or maybe a small retest of the channel, but then move back to the upside again. You don't want to see volume up and down, because it's a fight between the bulls and bears, and they're can't really figure out which way they want to go. And the other thing it's important to note, which you can see, is a lot of the time right now on this whole move, I can't really show you because I need to sort out my license for ExoChart, but you can see clearly that open interest, which is new money coming into the market, is happening. You're seeing more money coming into the market. We're also seeing CVD start to increase as buy pressure. So CVD is cumulative volume delta, and if it's to the positive side, it means more buy pressures into the game. If it's to the downside, then downward pressures into the game. In fact, let me just show you what I mean by that. If we head over to Bookmap, which I have paid my bills on, you'll see that you have the cumulative delta here, CVD. So when we see this in the negative, it means bearish pressure is more prevalent than bullish pressure. But what happens is, if you see these kind of ideas where you're seeing pressure moving to the downside, but price is staying relatively static, or maybe not static, let me just tighten this up a little bit. As you see pressure moving down, does that coincide with a move to the downside on the charts? Now this, in actual fact, is, you can see as we move up here, price moves up here. As we move down, price moves down. So you can see a correlation at the moment, but sometimes you'll see that it won't correlate, and what that essentially means is there's a bigger player absorbing the idea of a move to the upside or the downside. So all the aggressors, the market orders, are coming in, hitting the bids, bang, 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 but limit orders are absorbing that pressure, and what it essentially means is there'll be a point where pressure can't get through, and a move to the downside will occur. So what we're seeing on a longer time frame is that you're seeing open interest, which means more money coming into the market. We're seeing CVD moving to the upside, which means buying pressure, but again heading back over to the charts. We're not seeing any real movement in pressure to the upside. If anything, we're seeing movement to the downside, so it's a divergence. So again, when you're seeing pressure, open interest, both coming up, but price not going anywhere, means bigger players are absorbing the price, and then the price will start to move back down again. So yeah, that's pretty much all I've got for you. I know it's been a bit waffly and gone on a little bit, but this was more about just kind of taking a day's worth of data and seeing if there's been a change. And really, the only way I can kind of cross reference it is we start to see that move breaking down. I think it was from about here when the news came out, or whenever it was, about Microsoft, and then yeah, it seems that we've kind of just headed down to the downside. This is released. This is at 13:47, so the markets don't open, or New York doesn't open for another hour and 15 minutes. 45 minutes. Yeah. So we'll see what that happens, because it's New York hasn't had too much time to react to that news, so that's going to be interesting to see. So that being said, I shall leave this one here, and I shall catch you guys in the next one. Don't forget, if you're not in the server yet, come over and get yourselves involved. If you're not got a platform, I suggest using the link in the description for ByBit. And again, whether I've decided to add the video in this section or not, I don't know. But either way, lots of good bonuses and worth welcoming you guys across. So anyway, let's leave it there, and I'll speak to you guys in the next one. Bye for now.